can talk the whole day. Okay, so you need to guide me and keep putting things up and just reminding me on the time, otherwise I get carried away. This is something I eat and breathe every day, so for me it's exciting, and I'm hoping that by the end of the day it will be exciting for you too. So I'll take you through, I'm not sure what you covered last month, but I will quickly just touch on the principles of insurance. I believe it's important for us to put it in perspective, just in terms of understanding how the insurance business works. Then I'll quickly just move on to motor insurance, and then the home covers, the personal accident. From my presentation last year, I've actually added hospital cash plan. I'm sure you've seen it coming up quite a bit, especially if you have an account with Edgar's and things like that, or banks and so forth. I'm sure you've actually been exposed to this hospital cash plan. Then I'll touch on claims, then a few topical issues. I think now we did a good job, so I won't spend too much time on it. But I just wanted to say to you, of course, then I'll touch on Nico's diamond, otherwise I will get fired. And then I wanted to say to you, the things that he was talking about, that insurance companies are still adjusting to having internal audit structures, having risk management structures. We don't have such problems at Nico's diamond. I'm sure the regulator was actually using us as a case study in setting up some of these regulations. Okay, so let's quickly move on to the principles of insurance. If you could just bring them all up. Okay, whilst he's sorting himself out, I guess I can start talking about the principles of insurance, because people always accuse us of small print. People always accuse us, I've been to meetings where they say, when you come here, you're smiling at us, you convince us to buy the product, but when a claim comes, you bring a different set of people. It's not your smiling face anymore, it's those people that are leading us to the small print. But it's important that we understand the principles of insurance, because they underbid the way we do business as insurance companies. And I'll just like to start with the first one, which is utmost good faith. And now raised an important thing that as insurance companies, we should demand to see, for example, the vehicle that we're insuring. But I'll tell you, 20 years ago, it's not 20 years ago, 20 years ago, we never used to do that. We didn't have to see the vehicle. Someone would actually phone and say, I want to take out an insurance policy, this is my Mazda 323, this is the value of the vehicle, and so and so, and would actually go ahead and issue cover. And sometimes would never even see that client in the year unless they had a claim, because it was done in utmost good faith. But you find that the world has changed. I don't know whether we are becoming greedier as individuals. There's a lot that is happening. So certainly you'll find that over the years, we are having to demand to actually see the vehicle before we insure it. Because we've had incidences within the industry where people have actually moved from one insurance company to the other, insuring an already damaged vehicle. And believe you me, they're able to get a police report. They're able to get all the documentation that we require. And some of us as insurance companies have been hit. So you'll find that things like utmost good faith, we still deal in utmost good faith, because there is information that we require, and we are assuming that as we go into this relationship, being the insured and the insurer, you will actually be honest in the information that you give us. So that is still a principle that really underpins the industry. But unfortunately, I think it is being tested in some instances. Principle of insurable interest. There is no way I can take Ruth, is it Ruth? Yes, there's no way I can take Ruth's vehicle and go to an insurance company and insure it. I don't even know Ruth, I've just met her today. I don't have an interest in that particular asset because it's not mine, it's Ruth's. So it's important that even as we engage with the public and we engage with our insureds, they really understand that for them to actually be given a policy, there must be an insurable interest. Okay, principle of indemnity. We are basically saying that in the event that you do suffer a loss, okay, we are supposed to bring you back to the position that you were before the loss. So insurance is not something that enriches an individual. It's not supposed to make you better off. It's supposed to actually bring you back to where you were. So if it is a vehicle, and I think now give the example, if you had a 323, we are supposed to restore you to a 323. We are not supposed to suddenly give you a BMW. You are not supposed to be enriched by this policy. So it's important that you're also aware of the principle of indemnity. And the other thing that is important to note is in the event that something happens to your asset, you are not supposed to sit back. So for example, let's look at Holiday Inn. If this hotel was to burst into flames, they are not supposed to sit back and say, we have insurance, let it burn. No, they are actually supposed to be responsible enough to minimize the loss. Hence you'll find, if you looked in this room, there are sprinklers. Did anyone see that? Yeah, there are sprinklers in this room. So they've already gone and put mechanisms in place that in the event that this room bursts into flame, it's not going to destroy the whole hotel. It's going to minimize the loss. So that is something that we expect the insured to be able to do. And you'll find that we have our risk engineers and so forth who will go around. So even when you say to us, I want to take out insurance, we actually come in, we inspect the building, and we say, have you put the mechanisms in place to ensure that you minimize the loss? Hence, I'm sure now some of you understand why the police were asking for the fire extinguisher in the car. Though I wonder how many of us can actually use that fire extinguisher. Yeah. Okay, principle of contribution. So remember I said you are supposed to be taken back to where you were before the loss, right? Okay, so it doesn't mean that you come and take out an insurance policy with Nicholas Diamond, you go and take out an insurance policy with, I never like to talk about competitors' names, so I will not mention any competitor's name. The only name that you will hear from my mouth is Nicholas Diamond. So you go and insure with competitor X and competitor Y, the same asset. And when your motor vehicle is insured in an accident, you think you'll come and claim from Nicholas Diamond, then you'll go and claim from competitor X, then you'll claim from competitor Y. It doesn't work that way. And believe you me, we have our ways and means of finding out that you were insured by more than one insurance company. And what that means is we will share that loss amongst ourselves. So that is the principle of contribution. So if your vehicle is a write-off, it was worth $2,000, you're not going to get $2,000 from us and $2,000 from the next insurance company. We will pay $1,000 and the other insurance company will pay $1,000. But what you have done is you have paid full premium with Nicholas Diamond and you've paid full premium with the other insurance company. So in the end, who loses out? So it's important that you understand that you cannot insure the same asset over a number of insurance companies. The principle of subrogation. Basically what we are saying here is in the event, for example, you are insured with us as Nicholas Diamond and you are hit by a third party, you have comprehensive insurance cover. What that means is we will go ahead and we will repair your vehicle and bring it back to where it was before the loss. But we now have the right to go after the third party and recover our money. So you hand over that right to us. We have repaired your asset, you are a happy client, we now can go after that third party and be able to actually get back our money. Which means if we are successful with that process, you will also then benefit because you will get back that excess that you would have ordinarily paid. Okay. And finally, principle of causa proxima, which is the nearest cause. Remember, for us as short-term insurance companies, you'll find that our policies are always very specific, sudden and unforeseen. If you look at a fire policy, for example, you'll find that we state in the event of fire and its associated perils, things like lightning, hailstorm damage, and so forth. So we are always very particular in terms of what we will cover you for. So you find that in the event that something does happen, we will look at what was the proximate cause. What caused that loss? Was it a fire? If it was a fire, yes, it's covered because you're in a fire policy. Was it a hail damage? Yes, it was hail damage. Therefore, it's covered. I'm trying to think of something that is not covered. Was it a nuclear attack that caused that damage? It was a nuclear attack, and then when you go into the policy, we're actually not covering for that. So you need to understand, or the public needs to understand, that they must be very clear what triggers a policy, what triggers insurance companies to sit up and say this is actually covered. And I think it's something that we have been weak on as insurance companies, but you find with the regulation that's coming in, we are being forced by our regulator to disclose. So even when you're taking out a policy, we need to be able to explain. The public must demand to say, I'm taking out this policy, what am I actually covered for? Because I think our challenge, especially as Africans, is we do not read. So I hand over a 12-page policy document. How many of you, there are some of you who said you had comprehensive cover. How many? Have you? You just signed. So that's the other challenge. People are not reading our policy wordings, but you also find that they are also very technical in the law language. And I think over the years you will find that those policies have actually adjusted so that the ordinary man on the street is actually able to understand what the policies say. Okay, let's move on to motor insurance. Motor insurance is the most common understood cover, especially in Zimbabwe. And you will even see from the statistics. Let's move on to the next slide. So what are the types of motor insurance? Okay, so it's currently the biggest insurance class being underwritten by our industry. I've said it's the most that's understood. And you find that over the years, there's also been a rise in the number of vehicles on our roads. I mean, I spent some time in Kampala, and believe you me, in Kampala you can spend 3-4 hours in traffic, in a traffic jam. And I always used to complain, this was, 5-6 years ago now, and I always used to complain at home, we don't have traffic jams. Then I came back, and I was like, oh my goodness, what has happened to my home country? We also now have traffic jams where you can actually spend more than an hour in traffic just to get home. So you find that a lot of people are investing in motor vehicles, okay? So what kind of covers are available? We're basically looking at 3 broad categories when we look at motor insurance. The first one is the full third party, which basically was explained that it covers the third party. In the event that you hit a third party, their liability covers attaching. But you find that, for example, when you look at the statutory one, there's a limitation in terms of the property damage, there's a personal injury and so forth. Really, what government is interested in is the life of the person more than anything else. So you find that there are some limits that you would have to, or the policy would pay in the event that people are injured or in the event that property is damaged. Then there's a cover that comes in between your full third party and your comprehensive, which is your full third party fire and theft. So you may decide that, okay, I don't want the basic cover. I want to also have my vehicle covered, but not comprehensively. I just want it covered for fire and theft. So in the event that my vehicle is stolen, the insurance policy will kick in, or in the event that for some reason my vehicle bursts into flame, the insurance policy will kick in. So that cover is available, but we find that it's actually not a very common cover in this market. Then you finally get your comprehensive, which will cover you comprehensively. In the event that you're involved in an accident, your vehicle is damaged, the insurance policy will kick in and be able to ensure that your vehicle is repaired and you get your vehicle back in the state that it was before the loss. Okay, so you find that the full third party is mandatory. There's the Road Traffic Act, you can refer to that. The rating structure is actually regulated by our regulator. And payout, I think I've already touched on this, I won't dwell on it. In terms of comprehensive, sum insured is based on market value. Okay, so that's important to note that you can't just come and dream up a value. So there you are with your Honda Fit, which has a market value of 5,000, but you come in and you dream a value of 10,000. In the event that something happens to that Honda Fit, believe you me, we won't pay you 10,000. We'll send our assessors, they will go into the market, they'll tell us a Honda Fit is 5,000, and that's what we'll pay you. It sounds ruthless because you've been paying premium based on what? On 10,000. But remember what we said, we take you back to where you were before? Hello? Hello? We take you back to where you were before the loss. So you were driving a Honda Fit that is $5,000, we will take you back to a Honda Fit of $5,000. So it's important that you realize, even as you discuss the cover that you want with Nichols Diamond, actually with Nichols Diamond, I'm assuming all of you by the end of this day will be coming to Nichols Diamond. Yeah? We've got our own motor assessors, for example, who can guide you in terms of values. I know sometimes it's very difficult for individuals to know what is my value, what is the value of my vehicle, especially I think in this environment where things do change quite quickly and inflation has been reintroduced and so forth. So it's important that your sum insured is based on market value. You'll find for us when we're looking at individuals, our rates hovers between 4.5 to 6%. So depending, we do ask some of that information that was highlighted in terms of the driver, the type of car, whether you've had any losses before. When you fill in the proposal form, those are some of the questions that we do ask. And our underwriters, they use that information then to be able to see what kind of rating would apply to you. Okay, some of you may ask, when we're dealing with fleets, you'll find that the rating does come down. I'm not here to talk about fleets, but just to put it into perspective for you, the reason that we're able to do that is because we're dealing with a larger pool. And I'm sure by now you understand that insurance is a game of numbers. Yeah. So the more we have, the more we can play around with, the more actuaries can be able to say, okay guys, you can do this as far as pricing is concerned. But when we're dealing with an individual who's just walking into our offices and saying, I want insurance, we are looking at only you. So you find that the rates, unfortunately, are slightly higher. Okay. Some of the exclusions, consequential loss, what do we mean by that? And I'll give you an example. Let's say maybe you're a taxi. I've seen quite a number of individual taxis that people operate. Okay, so let's say you're a taxi driver and you are involved in an accident. Unfortunately, what that means is you're losing revenue because your car is not on the road. So you're not able to carry or ferry people around the city and you're losing revenue. Unfortunately, the motor policy doesn't cover you for that loss of revenue. What the motor policy covers you for is for your vehicle, your asset. So that is an exclusion. So you can't come to us and say, I was involved in an accident, my car, you have given me an estimate that my car is going to be at the panel beaters for the next 3 days. On a daily basis, I was actually making $100 a day. I also want to push that claim through. You can't, it's excluded under this policy. Okay, damage to tires through application of brakes or road conditions. So you can't come to us and say my tire got damaged in a pothole. Unfortunately, we have a lot of potholes currently in our country. You can't come and claim for that. Unfortunately, it is not covered. Damage to springs and shocks due to the unfavorable conditions of the road. So unfortunately, our road conditions are not part of our insurance policy. Confiscation by custom officials, then you come and report that my vehicle was stolen. Unless it was really stolen, if it was confiscated, it's actually not covered in the policy. I thought I would go into a bit more depth in terms of some of the policy limits. Unfortunately, in short-term insurance, we have limits. We are not unlimited in what we can give. We have limits in terms of the policy, and you'll find that this is a typical comprehensive motor policy. These are the underlying limits. So besides your vehicle that you have declared has got a market value of 10,000, we have those underlying limits. So for example, your third-party property damage, these are standard, it would be sitting at 10,000, bodily injury 10,000, which means that in the event that you are driving and you hit a Mercedes-Benz worth $200,000, and you think the policy is going to pay, when you have an underlying limit of 10,000, the policy will only pay 10,000. Which means that you are now riddled with 190,000 that you must raise. So one of the things most people actually do is they will request those limits to be increased. So you can increase the limits, but obviously it comes at an additional cost. Yeah. Okay. Unauthorized passenger liability, for example, if you're driving a company car that doesn't allow you to carry hitchhikers, but you do, you can be sued for that in the event that there's an accident. Okay, so it covers things like that. Your medical expenses, you'll find that we've now put limits in the event that you are injured during an accident. You can actually claim some medical expenses. Normally this works in conjunction with your medical aid. So it's really taking care of your shortfalls. Okay, it's not replacing your medical aid. Things like your accessories, your car radio limit, we normally also peg it at a particular level, unless you do declare. You know, I know the young men in the room, they like the big stereos and so forth. You would have to declare that, you know, I've got a stereo that is worth more than the car. Otherwise, we'll pay you 5% of some insurance. Okay. Emergency accommodation. Let's say, for example, you're out in Chivu, you have an accident driving back to Harare. You can actually find yourself accommodation there and be able to claim under the policy to a limit of 500,000. Okay. Trauma treatment in the event that you are whisked by an ambulance to the hospital, you know, those things are covered. Towing charges are actually part of the policy. You don't have to pay a towing company. We will normally, you phone us and we are able to organize that and get it towed to the nearest garage. I thought it's also important that I share the excesses. For example, if it's a partial loss, so your car is involved in an accident, you get your 3 quotations, and it's coming up to $500. We don't pay you $500. We pay you less, 10%. So you contribute towards the repair of your vehicle. It's standard. Total loss, it becomes 3% of value. So you don't get your full $5,000, you get your $5,000 less than 3%. We have extra excesses for, you know, this is the underwriting bit of it. So if you're a driver under 30 years of age, we believe you are excitable, and you will try certain things, and you are most likely to have an accident as compared to someone who is in their 50s and 60s. Okay, so there is actually another excess rate of value. If your license is below 5 years, unfortunately we also penalize you. We are saying that you do not have the experiences yet, and you get excited. And I'll give you an example. My son just got his license 2 months ago. So every opportunity, he's a boarder, but every opportunity he has, he will say, "Mom, can I drive?" At this stage, I haven't allowed him to drive on his own, so he drives and I'm also there. So the other day I picked him up from boarding school, he's out in Marondera, and so he was driving on the highway. And according to him, what is the speed limit on the highway? 120. There, my dear beloved son, and there was so much traffic, he wanted to go at 120. And I said, when you are driving, your speed limit is 100. And he was like, I know why. And then he tried to overtake and he couldn't overtake. You know, so inexperience. We penalized you for that until, you know, you have gotten the experience and you are now a bit more calm in terms of driving. So you find that we do penalize you for that. Our policies, most of them cover the SADC region, but if you do have a claim outside of Zimbabwe, you find that the excess is actually a bit higher there. Windscreen, there's a contribution of a third that you make as an individual. And then theft of spare parts and accessories. So for example, if you're parked and someone does steal the accessories in the car, there is that charge as well. So I hope it's clear. And unfortunately, most people don't ask. You know, they're just so happy to have the policy. They don't ask these things, but if you do ask, people are actually able to explain. You are able to negotiate, your covers as well. I thought I would just share with you some motor statistics. These are specific to Nichols Diamond. the kind of premiums we've been writing on motor. This is just motor, both personal lines and so forth. So you find that our motor book has grown. Yeah, slight growth. I think when you look at the 2016-2017, we registered about 5% growth. Claims, unfortunately, are the bigger motor claims are the biggest contributor to our book, sitting at about 75%. So it is our biggest line of business. Claims are contributing 75% of all the claims that we have paid, and you can see the loss ratio. Our target loss ratio, for example, in 2017, our loss ratio was actually sitting at 51%, but you find that the loss ratio for motor was sitting at 62%. So motor is an active policy, which needs to be managed. And we try and balance it off with the other side of the business, which is your fire and so on. Okay. Some of the frills attaching to the motor insurance is things like roadside assistance, costing $36 a year, your overnight accommodation, I think I've touched on it, the free towing, the medical, I think we've already touched on those. Okay, let's quickly move on to home comprehensive insurance. How many people own a home? Not there yet. Oh, there's one. Are you insured? Is your home insured?
No.
May I ask what?
I don't know. I just look at it and think it's an expense that I cannot afford.
Once you look at it and you think, I've never seen a house brand new. But believe you me, houses have been gutted, by fire. And it's a huge investment. I think, especially for Zimbabweans, we value having our own home. Everybody aspires to buying a property. What would you say the value of your house is?
Maybe 30,000, 40,000.
Okay, 30,000, 40,000. Okay, so that's the rate there, 0.15%. So if we're looking at 40,000, 10% puts us on 4,000. 1%, yeah, this is per year, right? So 1% puts you on what? 400, and then another 5%, that's 6. Yeah? So $600.
Less than $2.
$600 per annum for your 40,000 asset, and you're saying it's too expensive.
I just nearly
Imagine. And I think a lot of people actually think home insurance is expensive, and maybe we haven't done enough. We need to talk to the regulator to do something about educating the masses. So you find that that's your rate, and it not only covers your structure, it will also cover the fixtures and fittings. So your kitchen, your lovely kitchen that you have invested in and so forth, all those things are covered. Your borehole pumps, your gate pump, all those are included in that particular rate. But you then must also make sure that you've also included them in that value that you're talking about. Okay, and then your household contents. Okay, so we may not have houses, but some of us are staying on our own, we're married, we have bought property, right? Okay, so how many of us have insured our household contents? Yeah, TVs, sofas, furniture, yeah, fridge and so forth. No? So when someone comes and steals your TV, you've just got enough money in your pocket to buy another one. So your rate is 1.5%, which is also affordable.
That's 0.15%.
No, that's even less actually.
On a $40,000 house,
It's less than
$60 per annum. Yes,
Yeah.
which is less than $1 a day.
So it's cheap. Pardon?
But my actually goes.
When we had said it's $600, it's actually 60.
Which is less than essentially a day.
Yeah.
So can I have 60 bucks? Can I have 60 bucks? I'll give you my number. And then we'll issue a policy for you. Yeah, as long as it's a structure. It's an insurable structure. Yeah, yeah. So we would look at it. Pardon? Yeah, but as insurers, the things we'll be worried about when we look at property are earthquake zones, which Zimbabwe is not. Okay, so you find that as long as you've built a solid structure in the rural area, why shouldn't we take it up and insure it? Pardon? Yeah, wetlands, we'll look at those things. Yeah, yeah. Oh yeah, wetlands is a big thing for us. It's in there, you build houses all over the place. Okay. And then all risk cover, which covers the insured property that is accidentally lost or stolen. So things that you carry in your bag, your laptops, you can put them under this policy. Your laptops, your phones, your iPads, we are all something, there's I-ness in us. Those are the things that you can then include. Your spectacles, for those that wear spectacles. Those are things that you can put under that particular policy as well. So you find that it's not a popular policy. It's unfortunate. There's room for us, I think, to do more as an industry in terms of just promoting it. Because you find that we've had a few incidences where houses have been burnt in the high density areas. I think there was the Chitubisa incident of explosions. What year was that? 2013? Pardon? 2013. Yeah, 2013. And you find that those families were now staying in tents, which is sad. Yeah? And they were now having to get hand-me-downs from well-wishers, in terms of clothing and so forth. So it's really sad. It's a policy that we haven't done much on, and I think it's a challenge to all of us. I think I've already touched on these things. And the beauty of homeowners especially is there's no excess. On motor I went on and on about excess. If your house is 40,000 and it's erased to the ground today, it's at replacement. It's not at market value, because remember, markets fluctuate depending on the buyer-seller, who is who. But you find for property, it's on replacement. So it's a brick by brick. Because the intention, remember, is for us to get you back to where you were before the loss. So if a brick is costing X amount, we must actually be able to ensure that you replace your house for 40,000. So you are not contributing any excess to that. So it's something that you need to know. Let's move on. When I want you to move, you don't move. When I don't want you to move, you move. Young men. Okay, so these are some of the frills that we have. So for example, if something happens to your house today, you can enjoy alternative. So you can get similar accommodation and we'll pay the rental on that for a specified period, whether it's 6 months for someone's house to be rebuilt. So you find that is there. If your clothes are stolen off the washing line, I don't know whether that's still happening quite a bit, but I know for those people who stay in flats especially, you have to sit and wash your clothes, otherwise you find them gone. But those things are covered. Your outside furniture, your garden furniture, you can't every day be shipping your furniture into the house. You find those things are taken care of. Money lost due to burglary. Most of us don't have any cash anymore in the house, but if you do, there's a limit attaching as well. Deterioration of things in your fridge.
There's a lot of cash in the house.
That's not in the banking system there. But we would only pay you $200. So if you're sitting on $100,000 cash, we're not touching that. We used to have a lot of power cuts. And some of us stock a lot of things in our freezers. There's a limit there, 1% of total sum insured. Replacement of lost house keys. If you lose your keys and it happens, you can actually claim under the policy for the locksmith who has come and given you a fresh set of keys. Okay. Death. Why is there some laughter? I'm interested. Please share. Pardon? Is that a beautiful girl? Eh? Yes, yes, is that an attractive girl? And then death of the policy holder, the limit actually does pay out $5,000. So those are some of the frills. Then I've already touched on all risks, which is basically your clothing, your budget, your personal effects, your phones, and so please go back. Please go back. I can ask you to move forward. But it's important to note that you must list. Yeah. So when you are taking this out, it's important that you list that you've got 5 cell phones. You know, you've got this laptop. We normally also want serial numbers and so forth. And these are the rates applying. You'll find that they're much higher. Because unfortunately, I'm carrying my laptop in my handbag. I'm moving from place to place. It could be stolen. And the risk is much, much higher. So you also find that the rates are also slightly higher. Let's move on. Okay, personal accident cover. So we are basically saying in the event that you are involved in an accident, this is a cover that you can actually take out as an individual. Okay. And we normally, I always laugh at this statement with the underwriters, violent, external, and visible means. So it doesn't cover sickness. Sickness is not violent and external. But if it's a road accident, if you fall in the shower, you know, if you trip and fall in your garden or whatever it is, you'll find that you can actually take out this policy. It's based on a limit. So for example, you can say I want a personal accident limit of 10,000 to 20,000, whatever amount you want. Those are the rates applicable, ranging between 0.15% to 1.5%. And you also find that there's no excess under this particular policy. Okay, let's move on. Don't you like that ad? Don't you like it? Make sure you're insured this Easter. Okay, let's move on. Like I said, this is a new policy. New, not in it's just coming, but new, it's been here for a number of years, but it's not as old as the other policies. It's basically a hospital cash plan that in the event you are hospitalized for more than 48 hours, you can actually get a daily payout. Okay? In our instances, because Diamond, we paid that daily payout at $80 per day for adults, $50 for children. It's really supposed to cover incidental expenses. And I'm also, from our experience, you also find that not everybody is on medical aid. That's the first thing. Secondly, we have a lot of people in the informal sector who are breadwinners. So that vendor sitting at the side of the road, if they're not there selling their wares, it means that they haven't made any money. And yet there are daily obligations that we all have as individuals and families. So you find that you don't necessarily need to use it for your hospital expenses. It can actually be money that you know is going to buy bread for your kids as they go to school and so forth. So it's really a payout that you're given. We don't ask what you're using that payout for, okay, as long as you've paid your premium. So the annual policy limit is $2,400 for an adult and $1,500 for a child for one event, but in a year, because remember we run annual policies. So for example, what that means is if you are hospitalized for a period of 30 days, continuous 30 days, we would actually pay you out up to a limit of $2,400. And in any 1 year, you could actually have 2 hospitalizations. Okay. I just need to highlight that accident is covered immediately. So for example, if you came into our offices today and you paid your $1.50 and you walked out of our offices and you were run over by a motor vehicle and you were hospitalized, the policy would immediately kick in and start paying you. But if you paid us the premium today and you are sick, you would have a waiting period of 3 months. Okay. Just important. Okay, so let's quickly move on to claims. I understand my time is running out. Yeah, we say our philosophy is we are in business to pay claims. So we are not in business to collect premiums. We are in business to pay claims. And you'll see, I'm sure you saw from just the few snippets I shared with you that we do pay claims. Okay, but there's a procedure, and I think most people don't understand the process of claiming, and I thought I would just quickly share it with you. So it's important that you advise us as your insurance company immediately after the accident. This can be done verbally, telephonically, through an SMS, because we need to open a file. You were told that we are file people. We need to open a file that our client has intimated a claim. And then we share with you the things that we need. There's a claim form that will need to be filled in. I think we just used the motor policy as an example here. We'll need 3 quotations, we'll need the police report. Unfortunately, those are things that you have to do yourself. So you have to get the 3 quotations. And remember, in Zimbabwe, if you are involved in an accident, you cannot leave your car until the police have come and actually done their work. So we expect a police report. Okay, normally what we do, once you have intimated the claim, we appoint an assessor. So we appoint an assessor who now verifies the losses and all the details around what happened. As an insurance company, we have options. So we can either repair your vehicle, we can replace it, we can reinstate your asset, or we can actually pay you cash. So those are the 4 options normally that are available to us when it comes to how we deal with your particular loss. You are not allowed to dispose of any damaged property, because depending on how we eventually settle the claim, maybe that damaged property then becomes our property. So for example, if you have a write-off and we pay you in full to the level of your sum insured, we would want that salvage. It becomes our property. So you can't go ahead and dispose of it yourself. Otherwise, what that means is we will now pay you less the value of that salvage. Because remember, even if it's salvage, it has a value attaching to it. You can't repair. So you can't, for example, be involved in an accident. Yes, you've done your police reports and so forth. Then you immediately go to the panel beater and you decide, I'm repairing my car. I need my car, you repair it. Or it's a small, a dent. I think I can afford to repair it. You can't do that without our permission. And then you come to us and say, I was involved in an accident, but I went to panel beater X and I repaired my vehicle. And done our investigations. So as Nichols Diamond, we're basically focusing on what here. As Nichols Diamond, claims handling, we have entered into partnerships with panel beaters, assessors. Allow us, we know the value chain. We know what's best for you as our client. So allow us to recommend, we normally will recommend which kind of beaters you can get quotations from and so forth. In terms of negotiating, then we negotiate as well with those panel beaters. Okay, let's move on. I won't spend too much on this particular slide, but it was basically showing you the composition of our book as far as motor, fire business, accidents, and others are concerned. Okay, let's move on. I won't spend too much time on the topical issues, but just to say, as insurance companies, we work through distribution channels. So we are not expecting that everyone in Zimbabwe is going to come to our offices to buy our products. So we've had to partner with brokers. I think this was already discussed in the earlier presentation. We've got brokers, we've got agents, we've got banks that insurance companies are working with. And now we've had to consumerize our product. So you find that it's available with ZimPost. In some instances, you find it in retail shops now. So we are having to ensure that it's no longer about the client coming to us, but we are actually making it convenient for our clients. Okay. Young man. Okay. Market challenges. So we operate in an industry that has its own challenges in terms of the economic environment, in terms of the regulatory environment. The regulator is pushing a lot of things at us. Yeah? Sometimes it's making it expensive for us to do business. It's increasing our cost of doing business. But the regulator is saying, I'm protecting policyholders' funds. Okay, so you find that it's a really dynamic environment for us right now. And there are a lot of factors that we need to be able to take into account as we do our business. The rainy season. We always say, come November, when we do our financial performance analysis, October, November, December, we know the accidents are just going to go up because of the rainy season. Okay, it's a trend that we've noticed. Road conditions, we are not happy with the road conditions because certainly it does increase the number of accidents. Fraudulent claims, I think it's been touched on. Ballpark figure is we are most likely paying 30%. 30% of what we are paying in claims is most likely fraudulent. But because we do not have mechanisms to pick up these frauds, unfortunately those things are actually going through the system. Okay, so the importance of insurance, you only realize the importance of it when something happens and you don't have it. Unfortunately, that's how it works. Okay, let's move on. I won't dwell too much, but I thought I would share a bit about Nichols Diamond. So that's our journey. Nichols Diamond merged in 2002. It was the National Insurance Company of Zimbabwe, Diamond Insurance, to form the biggest and largest insurance company at that time. And we listed on the Zimbabwe Stock Exchange. 2003, we embarked on a regional expansion. 2004, 2006, we subjected ourselves to rating. So you find that as insurance companies, you should ask, what's your claims pay? What's your claims rating? As far as the ability of you to be able to settle claims. Some of us have subjected ourselves to it. We're able to share that with you. Most of the companies in Zimbabwe use a South African company called Global Credit Rating Company of South Africa. The representative from IPEC also talked about processes and procedures. We are ISO certified, and we've been since 2004, and we continue to subject ourselves. Basically, what that means is our back office is in order. Things don't get lost in the system. There's nothing as horrible as coming in with your claim, and then you're told you can't find your file. Can you supply us with your receipts that we gave you when you paid your premium, your policy, you know? So our systems are working and we subject ourselves to ISO certification. We successfully recapitalized in 2009. In 2014, we continued on our journey in terms of regional expansion. We established an office in Mozambique, Diamond Seguros, and we also acquired a company in Malawi called United General Insurance. And in 2017, we've had significant shareholder changes. We are currently in a transition mode. We are moving to the First Mutual Holdings Group. Okay, let's move on. That's our vision and mission statement. We want to be a highly visible and preferred provider of innovative risk solutions in our market. So my task is really to make sure that everybody, one, knows about Nichols Diamond, and secondly, they are using our product. Okay? And we also want to be able to provide these solutions underpinned by a highly competent and innovative and dedicated team for the benefit of all our stakeholders. Okay, let's move on. Our values, I won't go into depth, but it's important that as organizations we have values. And our acronym is PASHI, which is professionalism, accountability, teamwork, innovation, and excellence. Okay, let's move on. These are some of our competitive strengths. As Nichols Diamond, we are a strong, highly recognized brand in this market. I've already touched on the issues of ISO certification. Highest concentration of technical insurance skills. We have fellows, we have associates. So we have people who know what they're doing when it comes to insurance. We have sustained our market leadership. We have a strong claims paying ability. And we have a strong capital base. So even though the regulator was talking of, oh, we've increased to 2.5, for us, it doesn't faze us because we are way above the 2.5 million. Okay, let's move on. Okay, this is just your claims paying ability. We are currently an A- rated company. There's only one insurance company that is above the A- rating. And currently you find that most of us cannot cross this invisible ceiling because of what's happening in our economy. Okay, let's move on. This is our branch network. So this is where we are physically present as Nichols Diamond, but remember I said to you, we work through agents, brokers, and so forth. So as long as you are talking to an agent or a broker, you will be able to access our products and services. Okay, let's move on. So currently these are the two regional operations we still have. That is our Malawi office on your far right, and that is our Mozambique office on my immediate right. Okay, so this is the executive team. Our MD is Mrs. Grace Muradzipa, and she's got 3 lieutenants One runs with the operations, no. Gloria is basically our FD, so she runs with the corporate services, so besides the finance, she's also in charge of the HR function and the treasury function and the ICT function. And then I run with business development and marketing. Okay, thank you so much for your attention. Great presentation.
We did. Thank you very much, Gugu. I'm sure no one was falling asleep. It was very lively and engaging. Thank you very much for that. Very detailed as well. So we are running.
Sometimes it's because of ignorance on the part of the insurer, of the policyholders. Or because they don't discuss. Where we have major issues about multiple policies is on the funeral side. You have Gugu put her dad on a funeral policy. The sibling puts him again on their funeral policy. I also put him on the funeral policy. So now you have one person who is covered by 3 policies. But when they die, there's no way you're going to get 3 coffins, 3 buses, groceries from the 3 companies. So you only have 1. So it's also on the side of the policyholders themselves. So as families, one issue that we encourage is they should always discuss about these things to avoid multiple policies. You are married, you put your wife on your funeral policy. She also puts you. But the issue is now you are losing out. You are paying where you are not supposed to be paying. So multiple policies is on the side of the policyholders, but we are coming up with consumer education initiatives to make sure people talk about these things to avoid losses.
Maybe I can also come in there. You'll find that on most of our proposal forms as well, in the short-term space, we do ask who your previous insurers are and whether you actually have any insurance. So you find that sometimes, like Lloyd has said, it's ignorance, where someone thinks they can then benefit more than once. But those are questions that are actually contained in our various proposal forms.
The principle of contribution normally applies to short-term insurance. With life insurance, it finds that someone buys a life policy with insurer A and another life policy with insurer B. If you die, you can claim from both the policies. There is no principle of contribution.
Passenger insurance, why is passenger insurance not automated? You have a problem there with the passenger insurance. You know the cost in terms of the premiums that you are supposed to pay. Let's say you run a transport business, you have a combi or a bus. You know that if you are to buy passenger insurance, it means the premium that you are to pay is on the high side. But if you say you use that combi for private business or it's just for home use, you know the premium is on the lower side, yet you use it for public service. So the problem there is you end up not getting a compensation for your passengers if you're involved in an accident because you were not truthful. One of the issues that, I don't remember if Gugu raised it, on the issue for full disclosure, which you really have to be truthful when you're buying an insurance policy to avoid the insurance company refusing to pay or to settle your claim because you would not have told them everything about the policy that you are buying. So it's necessary that when you have a public transport vehicle, you make it known that it's for public service, it's a public service vehicle, so that they charge you premiums according to the use of the vehicle.
On that. Right, what we have seen in the industry, I am actually in the transport industry, what we have seen in the industry is that some insurance companies, right, they, for example, you know that for passenger insurance, it's about $15 per person. So some insurance companies, they don't charge that amount, right? And probably they don't charge the price that is set by ICZ, right? What they do is they actually undercut. And they say, for example, it will be $10 per passenger, right? So as a result, you've got different pricing, you know, within the insurance industry. So what we are saying is, if you were to automate that part, then you would have these other insurance companies coming in, because When it comes to claims, you find that those insurance companies are not able to meet the claims. We know the names. They are not able to meet the claims because they would have charged a lower premium in the first place.
Done with the insurance claims that continuously fail to pay claims. I think this is an issue to do with complaints handling. Where we have received complaints, we have taken measures against certain insurance companies. I think in the past, we have seen certain insurance companies being closed. It was basically an issue of failure to honor claims. And we continue to receive complaints. At any time if we receive a complaint, we can institute an investigation into that company, and if we see that there is grounds to cancel the license, then we can cancel the license. Then the other question is, are there any cases in which people have been arrested for insurance fraud? I'm not aware of any cases that have been where people have been arrested for insurance fraud, but I know insurance companies that have repudiated claims because they think that the claims were fraudulent, and some of them have come to our office as complaints, and we have dismissed those complaints. And the last question.
Sorry, maybe to also come in there. I think the challenge that we have as insurance companies is you find that our judicial system is not very friendly. And I think it's an area that needs to be worked on. So for example, as Nichols Diamond, we have said that when we discover that someone has put through a fraudulent claim and we actually pick it up, it's important that we also report the matter to the police. But you know how the judicial system works. So that the file that disappear, it can't be found and so forth. So I think it's an area that really needs some focus so that the public understands that putting through a fraudulent claim is actually a crime. And it's not something that should be tolerated in our society.
In fact, we have had arrests. You remember the Kwekwenes, the one who, every time that she sees that one of the patients is probably about to go to heaven, she would buy them an insurance policy so that when they die, she goes and claims. Remember the insurable interest that Gugu talked about, that for someone you have no interest in, or for an asset that you have no interest in, there is no need for you to buy insurance for that person or that asset because it's not yours. You won't suffer any loss if that asset goes or that person dies. We also have the issue of in Wange, we had one of it was a fraudulent claim. The person was dealing with someone from one of the insurance companies. They were arrested. We also had one in Mtare where they claimed the person had died. They went and claimed the life assured. They took the money. When they were about to get the money, I think it was one of the.
I think they got the money.
Yeah.
The person died. The person claimed to have died. The person who was sponsoring the premium payments was in the UK.
Yes.
So it had links to a hospital in Mutare. They got a corpse from the mortuary. They put it on the driver's seat and they burned the car. And they laid a claim on an insurance company. And they got paid. And the deceased was then seen on 4th Street trying to get transferred to Mutare. That's how he was arrested.
Yeah. So it's actually a criminal offense.
It is a criminal offense.
One of the issues that some of them that has been raised is on staging accidents. Like you see that your Range Rover is developing maybe a mechanical problem, or you have had it for a very long time. You look for those who are very good at staging accidents. Someone who knows how to crash, but without necessarily dying. They take your car, get involved in an accident, it's a write-off, so that you get another car. But those things can be picked in. Imagine you have taken your Range Rover, involved in an accident, then assessors come in, or the forensic analysts, they say, no, this was staged, and you won't be paid. You have already lost your asset, you won't get the replacement value. So it's really a crime that can get one convicted. So it's one of the issues that has to be dealt with. On the medical side, what we know is he has a medical aid policy. She is not on medical aid policy, maybe she's his cousin. So he gives her his medical aid card to say, go and get treated using my card. Yet she doesn't have the policy. So those are the kind of frauds that are being faced in the country. But because of the mechanisms in place, some of them are picked.
Yeah, but some are not, unfortunately.
Yeah, some are not.
Yeah,
so they always claim.
Yeah, it's an area that we are really focusing on as an insurance industry. I would actually just like to share a funny incident that happened in Bulawayo, where someone actually dressed up, they put a helmet, they protected themselves, and they got into their car, and they drove into a wall. So the intention was they would then get out and remove, so that they are not injured. But unfortunately, the impact was so great, they passed out. So people actually found him in the car, in his gear. So you can imagine that claim was actually not paid.
The whole insurance now mature at a certain period, even if there is no risk occurrence. I think this concept of policies maturing applies to funeral insurance, to life insurance, rather than to short term. In short term, you pay a premium, you are covered for a certain period. If that insured event doesn't happen, you don't get anything.
And on that one, you buy an insurance policy for your car for a term, you are not involved in an accident. It doesn't mean that you can go and claim the money from Gugu to say I was not involved in an accident, so give me back the money. Remember, she was ready to pay or to replace your car if you had been involved in an accident soon after paying the premium. So you can't say because I was not involved in an accident, can you give me back my money?
And it's important because remember we said that insurance works on the law of numbers. It's a pool.
Yeah.
So we are managing a pool. We've just collected a fraction of your value and we've put it in a pool. And we have made certain assumptions on that pool. So even though we have made assumptions, let's say we are saying we are most likely to get 50% or 60% of our clients claiming from the pool. If we get 100% of our clients claiming from the pool, we are still liable for all those insurances. So you find that this year you may not claim, but certainly there are others who have claimed. Next year it could be you. So it's a pool that we have to delicately manage as insurance companies. Maybe quickly moving on to the questions I have here.
Yeah.
Okay, all right. Okay, I was asked the first one, there were two on our regional operations, and I'll try and tackle them all at once. The first one was, since you have now opened branches in Malawi and Mozambique, does this mean that a Zimbabwean can insure property in Mozambique and Malawi? I'm assuming that the Zimbabwe has the property in Malawi or in Mozambique. I wasn't quite clear. Are you talking about a property here in Zimbabwe being insured in our regional operation?
Property in Mozambique. I have a house in Mozambique.
Okay, all right. Yeah, so if you have a house in Mozambique, you can then use one of our companies to insure that property. We actually have companies that have set up, so for example, you'll find that a company operating in Zimbabwe opens an operation in Malawi. We have actually been chasing those synergies as well to say that can this Zimbabwean company then use our operation in Malawi? We're assuming that when you externalized your forex, you went through the right channels as well. And we won't have the RBZ after you. So that's possible, and that's something that we're doing, as long as your property is domiciled in that particular country. Okay, the other one was asking on comparison in terms of performance to Zimbabwe. The Zimbabwe operation is still the dominant operation. So you find that those operations, I'm trying to think of the contribution of Malawi, because Malawi is a pure subsidiary of Nichols Diamond, and I don't have the figures offhand, but we are certainly the bigger brother when it comes to the contribution towards performance. Our regional operations have really suffered from not having competitive capital because of our own situations in Zim, where we are not able to actually externalize funds to be able to properly capitalize our entities. So that has been a struggle for us because of the lack of forex in the country. But currently we are the bigger operation, and we have said that we have the skills and the ability to then be able to assist those operations in bringing them up to the same level as ours. Okay, I hope I've answered those two questions. There's the issue of payout claim-free clients. We are not there yet. We used to actually have a no claims bonus in the 2000s when things were okay. But you find that our capital has been eroded over the years, and it's something that we have actually not reintroduced into the market. But I'm assuming that as we grow our balance sheets and our reserves, it's things that we can begin to give back to our clients. But currently at the moment, no, we do not have those facilities. Okay, someone is asking, why are you asking for hard cash for travel insurance? We are asking for hard cash for travel insurance because we have to remit that those premiums outside the country. So unfortunately, we were not asking for hard cash, and we were having to stand in the queue with everybody else. And you realize that our central bank has got a really delicate juggling act when it comes to who accesses foreign currency. So we felt it was prudent for us to actually ask for hard cash because our bankers advised us that when we deposit hard cash, it's easier for them to get the permission from the central bank to remit those funds out of the country. Currently, our dominant travel partner is based in South Africa, and for them to be able to pay those claims, they need to have received their premiums. So that's the reason why we have moved, and we are now asking for hard cash. But should the situation change and money is awash, we'll probably go back to the previous arrangement. Okay, someone is asking about salvage. If you salvage a vehicle damaged in an accident, what do you do with it? Okay, I'm assuming you are saying that if we take the salvage, okay, what do we do with it? We dispose it. There are auctioneers and so forth, we dispose. Yeah, we sell it off. We sell it off in its state. We get independent assessors to tell us what the value is, and then we send them to the auctioneers and they are auctioned off, whether it's to car breaking companies and so forth, who then can break it up and use the various parts. Okay. All right, those are the questions I had.
Short value, but they still want the scrap. To say,
You have been restored.
they still want
The
it.
principle of indemnity, you have been restored to where you were before the accident. So if you get the strength, you are profiting from it.
Yeah.
But we have the option. If you want your salvage, we put a value to that salvage and we pay you less. Yeah, yeah. So for example, if your value the value of your vehicle market value was 10,000, where you would have been paid 10,000 less the excess. If you wanted to keep your value, we would pay you 10,000 less excess, less salvage. So you may end up with 5,000 or 4,000, depending on the value of the salvage.
Then one of the chance. I think the last one.
There was a question on why is IPEC behind on quarterly reports. I think
I'm also waiting. I'm also waiting for that response.
we are not behind.
You are behind.
The quarterly report for the third quarter was published recently, and the one for the fourth quarter will be coming very soon. Hopefully before the end of March. Because if you look at most of these listed companies like Gugu, they publish 90 days after the end of the year. And we are buy a car and they don't change ownership. They retain the insurance cover that was belonging to someone else. You cannot claim on that insurance car policy because you don't have insurance point. So if you buy a car, you change ownership, you have to buy a new insurance policy for that car. You cannot rely on the insurance policy that was bought by the seller.
You can't transfer a policy to say from Chingira to myself because I bought this asset.
I can tell you almost like 2/3 of the people who buy vehicles, they don't change ownership. Almost 2/3 of those who buy, they don't change. I think it's because of the cost of actually changing ownership. So I don't know how you are going to deal with, how do you deal with such situation, because that's the practical situation.
But the law requires that you change ownership.
Yes,
So
yes.
you don't condone someone who is violating the law.
And the registration is still in that person's name. The policy is in your name as the owner of the, like I buy the policy myself. It's in my name because they have my details. Yeah.
Yeah, though the booking is in someone else's.
So the insurance come and can look at the agreement of sale.
So we look
and
at the
policy
agreement of
that
sale.
we have
Ah,
and
Okay.
Yeah. So the policy is in your name.
Oh,
Yeah.
but we encourage people to change ownership.
Yes.
Create challenges.
Yeah.
Yeah, because remember, for us, when we take over that salvage, we need all the paperwork associated with the motor vehicle. And when we do sell it off, ZIMRA also has an interest. And now you are having to look for the owner that is registered on the, yes, on the book. So you find that it does create challenges. And I think ZIMRA is working on trying to make it easier for people to.
I think Mr. Gugu probably knows what I'm about to say because I've complained to him before, but I was not satisfactorily answered. There's this thing that short-term insurers do where they tell you that you get a complimentary vehicle in the event that you're involved in an accident while your car is being fixed or whatever. But the case has been, they don't give you that vehicle when the time comes. They'll say, atina motor or something like that. Then maybe it takes time for the vehicle to be fixed. 2-3 months down the line, you're doing combis, but you were paying for a complimentary vehicle. How is IPEC as a regulator dealing with issues like that? Because in the end, you end up shortchanging the Indian people, but there are insurance at the end of the day.
That would be better on those issues, we should be able to deal with them.
In your case, unfortunately, it was after you had received your car back.
But we need to make it very clear that the complement should be in the policy.
Yes.
If it's not covered, don't expect that you will get that.
I was going to ask, is it covered?
Yes,
It was part of the policy?
I since left the company, but it was.
Yeah, because if it
Like in this case of electing your trustees, your board of trustees, so that they represent your interests. Some of these companies, you don't even know that you have representatives on the pension scheme. They should be representing your interests, but all of them maybe they are appointed by the CEO. Or you have the finance manager on that board of trustees, we have another manager, and no one represents employees.
Or
Yet,
someone is very vocal in workers'
Yes.
committee, yet they don't appreciate pension fund matters and choose them to represent you.
So what wako represent my interests a sponsoring employer, not the staff, not employees. Yet the law is 50% representation should be from staff, from employees, and the other 50 from the employer.
There aren't any more questions. Let me take this opportunity to thank you very much for such a lively discussion, to thank our presenters, Ms. Ngwenya and Mr. Chingina. Thank you very much for the time that you took to come and present. I understand you're very busy people, but you found it worth it to come and share your experience and knowledge with us. We appreciate that. Let's just give them another round of applause. And thank you, journalists, for taking the time out to come and attend this very long session. I'm sure that it was very informative, and going forward, we are going beyond the distribution of just newspapers, as I have just indicated on that whiteboard. We are going past reach, we are going past engagement until we get to the point of impact. We want to get to that point where we're going to surpass the 2.something% of insurance penetration in the country, if those statistics are correct. We want to go past the 5% that we were in around 2015 or 2016, or even before that. We really want to get to that point where you're going to drive people to take action and get insurance, especially even low income earners. So we want to really move people to take action. So as I was just challenging you, I've just written that let's go past reach, let's go past engagement, let's see the impact. It's a journey, and we're going to walk this journey together. Thank you very much for your time. I wish you a happy weekend. See you. Dollars. The runner-ups don't get any money. At the moment, we are unable to give them any money, but if any circumstances change and if there's sponsors on board, that will probably change. But at the moment, the person who gets the first place gets $100 every month. Okay, just to make sure that it's clear. Otherwise, have a great weekend. We'll be communicating about the next meeting date. Thank you.